I'm February. I'm working at this company called Dyno Nobel, an Australian company in the Indonesia business unit. So Dyno Nobel is a company specializing in selling explosive products and services. We sell explosive to mainly mining customers in mining industries, and also providing the service to blasting services. My role is now a finance director, covering all the areas in finance and also IT. So my job basically on day-to-day covering commercial and operational finance. On top of that, I also look after things like non-finance stuff like legal, risk management, meaning that we also have to look up to identify things related to risk to the company's business. Plus IT. IT are basically operational IT, infrastructures, and also the implementation of new systems. ACCA is globally accepted in a lot of countries, and a part of that, it covers a much bigger scope than a few others designations. You are not only learning accounting, but there are also some finance part of it, some leaderships, there are some corporate laws. So it's financial management. Those are the most important parts. Once you are going step up higher into the business, you need to be able to master or understand all areas of accounting and finance, not only accounting alone.
My name is Felicia. I'm currently working at KPMG Advisory Indonesia as a tax consultant associate. Tax consultant associate is the one who will assist the companies or clients to comply with their monthly or annual taxations, and also will assist the company when they have tax disputes such as objections and appeals, and also will prepare for the tax dispute reports. With ACCA, as we have learned from the fundamental models, I can say that I have more understanding about what is accountant and also about the rules of the IFRS and so on. And also I think the English, as it is the formal language of the ACCA that we have to, so our English is a bit more than our regular peers, and also we have more perseverance that is trained during our study. Having ACCA is like your passport to go anywhere around the world, because having ACCA qualification means that it is verified everywhere with the same standards of international standards, so you can go anywhere with ACCA qualification.
My name is Ruditi. Currently, I'm working at HSBC as the Asset Liability and Capital Management in the Finance Department. My current role is to monitor the liquidity risk, funding risk, capital management, and interest rate risk of the bank. I've been working for 14 years before I start taking the ACCA. The reason I take ACCA is because I was assigned in Hong Kong for 2 years at that time. I was assigned by my boss to look at the total department in our team on the qualification they have. So when I collect all of the information, only myself don't have any professional certification. Everyone, more than 200 people in my department, they all have the qualification. So when I went back to Indonesia, I feel that I am not qualified enough. So that's why I'm looking for other certification. Because ACCA is internationally recognized, usually the kids always follow that wherever they go to work in other countries. But I want to make it differently, so I will follow wherever the kids want to continue their education in other countries. Because I'm holding the ACCA certification, I can go anywhere. The other certification is the strength on taking the ACCA is, one, ACCA is international recognized. The second thing is they are fully strength in the accounting principle, accounting treatment, and because this also coming from the UK, we have the very strong ethics.
The most important for finance is to be able to partner with anybody in the business. Finance is not just a gatekeeper, but they also need to be able to not run the business, but more to partnering with the business to give them advice that whether the business is still on course or out of the course. And also, accountants in Indonesia are a lot, but qualified accountants, it's like you find a needle in a haystack. so it's not easy to find a qualified and good accountants.
One of the advantages taking the ACCA is they are not only talking about the accounting, but they are fully ahead with all of the advance in the future industry. Like now we are moving towards to the digitalization. They also have a discussion already fully aware with the digital related. So we already get some information from the ACCA about digital.
The automation will replace the current monotonous work in the accounting. The postings, transaction posting into the systems will be replaced. And for the people who is doing that work, they should be able to start thinking of how to develop themselves to do more analysis work, to do more strategic work. So that's the role of automation today.
Nama saya Adisti Kinanti Praga, panggilan saya Adisti. Saya berusia 22 tahun. Saya saat ini bekerja sebagai staf accounting di PT Prima Perkasa Global. Saya mengambil kualifikasi ACCA pada saat saya berkuliah semester 5 untuk program Diploma in Accounting and Business. Menurut saya, sertifikat ACCA sangat membantu saya dalam mencari kerja setelah saya lulus, karena saya sekali interview, besoknya saya diekspektasi masuk kerja, sedangkan kandidat lain harus tes berikutnya.
My name is Natalia Halim. My friends call me Natalia. I'm 22 years old, and I'm currently working as a finance graduate trainee in PT HM Sampurna Tibet. So right now I'm working in the group accounting department. More specifically, I'm working now in investors relations. So basically what we do is that we provide information to investors and to analysts regarding our financial performance. I have an advanced diploma in accounting and business from ACCA, and now I'm pursuing my bachelor's degree from Oxford Brookes University. ACCA qualification has helped me learn a broad range of knowledge, because in my role now, I'm expected to understand the financial numbers, but also at the same time relating it to the business situation right now. So these numbers have to tell a story regarding what's happening in the business. In 5 years, I would expect to have my bachelor's degree from Oxford Brookes University, and at the same time continuing the B papers. And in terms of work, I would expect to be in a more senior position in the company that I'm working at.
Hi, my name is Risunandi Muhammad, but usually people call me Nandi. I am currently 28 years old and now working in BP or British Petroleum Indonesia as finance project advisor. Now I'm doing my ACCA studies in strategic professional papers. So I take ACCA qualification for at least 2 reasons. First is because it opened my career opportunities outside Indonesia, and then the second one is because it teaches a more relevant curriculum for the new Industrial Revolution 4.0, which RPA, robotic process automation, and artificial intelligence will take many parts of our job. ACCA helps me progress through my career because now in my working place as multinational company, it is a requirement to have international certification to apply to a global vacant role. And now it's happened recently when I got promoted to be a finance advisor to Aberdeen and US. So it is because I put ACCA in my CV. My message for the ACCA young students are, first, is to always have a little extra for being an extraordinary. And for that, taking that little extra is by taking the ACCA to progress throughout your global careers. And then the second one is always to have a little extra to allocate your time every day. So by consistently allocating your time, it will be making us easier to pass ACCA examination.
My name is Alicia Ayunanda Swastika. People call me Alicia or Al. I am 21 years old and I have been an ACCA affiliate for a year now. I currently work at a pharmaceutical company that manufactures veterinary products. It's called Mahakam Vita Pharma. In my role, I handle a lot of activities actually. So they deal with lots of material price analysis and monitoring discounts as well, and also I help a lot in efficiencies and improvements in the manufacturing side of the company. In 5 years, I see myself in a more senior position, ideally in a consulting or advisory role
in perhaps in a different country, because I acknowledge that ACCA has global recognition, so I could definitely work in a different country. I choose consulting or advisory because I enjoy evaluating and analyzing business processes and their internal structure and trying to come up with ways on how to make them more efficient. I would very much enjoy helping companies by providing professional advice to help them become better in what they do.
I'm February. I'm working at this company called Nobel, an Australian company in the Indonesia business unit. So Nobel is a company specializing in selling explosive products and services. We sell explosive to mainly mining customers in mining industries, and also providing the service to blasting services. My role is now a finance director, covering all the areas in finance and also IT. So my job basically day to day covering commercial and operational finance. On top of that, I also look after things like non-finance stuff like legal, risk management, meaning that we also have to look up to identify things related to risk into the company's business. Plus IT. IT are basically operational IT, infrastructures, and also the implementation of new systems. ACCA is globally accepted in a lot of countries, and a part of that, it covers a much bigger scope than a few others designations. You are not only learning accounting, but there are also some finance part of it, some leaderships, there are some corporate laws. So it's financial management. Those are the most important parts. Once you are going step up higher into the business, you need to be able to master or understand all areas of accounting and finance, not only accounting alone.
My name is Felicia. I'm currently working at KPMG Advisory Indonesia as a tax consultant associate. Tax consultant associate is the one who will assist the companies or clients to comply with their monthly or annual taxations, and also will assist the company when they have tax disputes such as objections and appeals, and also will prepare for the tax dispute reports. With ACCA, as we have learned from the fundamental models, I can say that I have more understanding about what is accountant and also about the rules of the IFRS and so on. And also I think the English, as it is the formal language of the ACCA that we have taught, so our English is a bit more than our regular peers, and also we have more perseverance that is trained during our study. Having ACCA is like your passport to go anywhere around the world, because having ACCA qualification means that it is verified everywhere with the same standards of international standards, so you can go anywhere with ACCA qualification.
My name is Ruditi. Currently, I'm working at HSBC as the Asset Liability and Capital Management in the Finance Department. My current role is to monitor the liquidity risk, funding risk, capital management, and interest rate risk of the bank. I've been working for 14 years before I start taking the ACCA. The reason I take ACCA is because I was assigned in Hong Kong for 2 years at that time. I was assigned by my boss to look at the total department in our team on the qualification they have. So when I collect all of the information, only myself don't have any professional certification. Everyone, more than 200 people in my department, they all have the qualification. So when I went back to Indonesia, I feel that I am not qualified enough. So that's why I'm looking for other certification. Because ACCA is internationally recognized, usually the kids always follow that wherever they go to work in other countries. But I want to make it differently, so I will follow wherever the kids want to continue their education in other countries. Because I'm holding the ACCA certification, I can go anywhere. The other certification is the strength on taking the ACCA is one, ACCA is international recognized. The second thing is they are fully strength in the accounting principle, accounting treatment, and because this also coming from the UK, we have the very strong ethics.
The most important for finance is to be able to partner with anybody in the business. Finance is not just a gatekeeper, but they also need to be able to not run the business, but more to partnering with the business to give them advice that whether the business is still on course or out of the course. And also, accountants in Indonesia are a lot, but qualified accountants, it's like you find a needle in a haystack. so it's not easy to find a qualified and good accountants.
One of the advantages taking the ACCA is they are not only talking about the accounting, but they are fully ahead with all of the advance in the future industry. Like now we are moving towards to the digitalization. They also have a discussion already fully aware with the digital related. So we already get some information from the ACCA about the digital.
The automation will replace the current monotonous work in the accounting. The postings, transaction posting into the systems will be replaced. And for the people who is doing that work, they should be able to start thinking of how to develop themselves to do more analysis work, to do more strategic work. So that's the role of automation today.
Nama saya Adisti Kinanti Praga, panggilan saya Adisti. Saya berusia 22 tahun. Saya saat ini bekerja sebagai staf accounting di PT Prima Perkasa Global ini. Saya mengambil kualifikasi ACCA saat saya berkuliah semester 5 untuk program Diploma in Accounting and Business. Menurut saya, sertifikat ACCA sangat membantu saya dalam mencari kerja setelah saya lulus, karena saya sekali interview, besoknya saya diekspektasi masuk kerja, sedangkan kandidat lain harus tes berikutnya.
My name is Natalia Halim. My friends call me Natalia. I'm 22 years old, and I'm currently working as a finance graduate trainee in PT Sampurna Dewi. So right now I'm working in the group accounting department. More specifically, I'm working now in investors relations. So basically what we do is that we provide informations to investors and to analysts regarding our financial performance. I have an advanced diploma in accounting and business from ACCA, and now I'm pursuing my bachelor's degree from Oxford Brookes University. ACCA qualification has helped me learn a broad range of knowledge because in my role now, I'm expected to understand the financial numbers, but also at the same time relating it to the business situation right now. So these numbers have to tell a story regarding what's happening in the business. In 5 years, I would expect to have my bachelor's degree from Oxford Brookes University and at the same time continuing the P papers. And in terms of work, I would expect to be in a more senior position in the company that I'm working at.
Hi, my name is Nandi Muhammad, but usually people call me Nandi. I'm currently 28 years old and now working in BP or British Petroleum Indonesia as finance project advisor. Now I'm doing my ACCA studies in strategic professional papers. So I take ACCA qualification for at least 2 reasons. First is because it opened my career opportunities outside Indonesia, and then the second one is because it teaches a more relevant curriculum for the new Industrial Revolution 4.0, which RPA, robotic process automation, and artificial intelligence will take many parts of our job. ACCA helps me progress through my career because now in my working place as multinational company, it is a requirement to have international certification to apply to a global vacant role. And now it's happened recently when I got promoted to be a finance advisor to Aberdeen and US. So it is because I put ACCA in my CV. My message for the ACCA young students are first is to always have a little extra for being an extraordinary. And for that, taking that little extra is by taking the ACCA to progress throughout your global careers. And then the second one is always to have a little extra to allocate your time every day So by consistently allocating your time, it will be making us easier to pass ACCA examination.
My name is Alicia Yohananda Swastika. People call me Alicia or Al. I am 21 years old and I have been an ACCA affiliate for a year now. I currently work at a pharmaceutical company that manufactures betadine products. It's called Mahakam Beta Pharma. In my role, I handle a lot of activities actually. So they deal with lots of material price analysis and monitoring discounts as well, and also I help a lot in efficiencies and improvements in the manufacturing side of the company. In 5 years, I see myself in a more senior position, ideally in a consulting or advisory role, and perhaps in a different country, because I acknowledge that ACCA has global recognition, so I could definitely work in a different country. I choose consulting or advisory because I enjoy evaluating and analyzing business processes and their internal structure and trying to come up with ways on how to make them more efficient. I would very much enjoy helping companies by providing professional advice to help them become better in what they do.
I'm February. I'm working at this company called Dyno Nobel, an Australian company in the Indonesia business unit. So Dyno Nobel is a company specializing in selling explosive products and services. We sell explosive to mainly mining customers in mining industries, and also providing the service to blasting services. My role is now a finance director, covering all the areas in finance and also IT. So my job basically on day-to-day covering commercial and operational finance. On top of that, I also look after things like non-finance stuff like legal, risk management, meaning that we also have to look up to identify things related to risk into the company's business. Plus IT. IT are basically operational IT, infrastructures, and also the implementation of new systems. ACCA is globally accepted in a lot of countries, and a part of that, it covers a much bigger scope than a few others designations. You are not only learning accounting, but there are also some finance part of it, some leaderships, there are some corporate laws. So it's financial management. Those are the most important parts. Once you are going step up higher into the business, you need to be able to master or understand all areas of accounting and finance, not only accounting alone.
My name is Felicia. I'm currently working at KPMG Advisory Indonesia as a tax consultant associate. Tax consultant associate is the one who will assist the companies or the clients to comply with their monthly or annual taxations, and also will assist the company when they have tax disputes such as objections and appeals, and also will prepare for the tax dispute reports. With ACCA, as we have learned from the fundamental models, I can say that I have more understanding about what is accountant and also about the rules of the IFRS and so on. And also I think the English, as it is the formal language of the ACCA that we have too, so our English is a bit more than our regular peers, and also we have more perseverance that is trained during our study. Having ACCA is like your passport to go anywhere around the world, because having ACCA qualification means that it is verified everywhere with the same standards of international standards, so you can go anywhere with ACCA qualification.
My name
Good afternoon, everyone. Before we start this seminar session, let me introduce myself. So my name is Jonathan Theodore Kesuma, and it's an honor for me to guide this seminar session as the master of the ceremony. With all the biggest respect, I would like to thank all participants in the seminar with the title Corporate Sustainability Accounting in the Digital Transformation Millennium. This seminar is held by BINUS University together with ACCA. I also want to remind all the students from BINUS to change the name with format name, strip name, and for the BINUS lecturer, please change your name into lecturer code strip name. And for the public, please change your name with public strip name. To start this seminar, let's take a pray for a moment. I will pray in Catholic, and everyone can pray with your own respective religion. Father God in heaven, thank you for gathering all of us today for joining this seminar. We hope that this seminar will be useful for us in the future, and we hope that we can gain a lot of insight today, and hopefully our speaker can give their best so that all of us will know something that we haven't known before. Amen. Dear all participants, I want to tell you that all participants are required to fill in the re-registration form as a form of your presence now, and the link is already available in the chat box. The re-registration form will be closed at 3 p.m. And at the end of the session, please kindly fill in the feedback link that will be given in the chat box. I also want to inform that the question and answer session will be available after all presenters present the materials. Now, let me introduce Mr. Gatot Supriyanto as ACCA, Master of Business, PhD, CA, CPA Australia, CFE, as a Dean of Faculty of Economic and Communication of BINUS University. To Mr. Gatot, now the time is yours.
Okay, thank you, Jonathan. Can you hear my voice right now?
Yes, sir.
Okay.
It sounds really clear.
Thank you. Mr. Jimmy Greer, Head of Sustainability ACCA Global, Mr. Brad Denig, Managing Director of Innovation and Sustainability, AWR Llyod, Ibu Dewi Fitriasari, our faculty member from Accounting and Finance Department, BINUS University, Ibu Hani, and Ibu Dames from ACCA Indonesia, lecturer and faculty member of the department, BINUS University, and my beloved students who attended the session. Good afternoon and a very warm welcome to all of you. Welcome to this webinar, Corporate Sustainability Accounting in the Digital Transformation Millennium. As the continuous initiative between ACCA Indonesia and the department, this is part of our idea to introduce and update to our stakeholders, including students, regarding the latest development in the world of accounting and finance. I believe this topic is really important amidst the issue of corporate responsibility, climate change, digitalization, and of course, what currently happen around us right now, the pandemic of COVID-19. I'm hoping that this webinar will provide lots of insights to the students to prepare for their future. The Faculty of Economics and Communication really welcome this initiative because this is very good idea to promote the understanding of the profession and also provide a lot of insight from international perspective and different practices around the world. Finally, I'm hoping that this relationship will be more strengthened between ACCA and BINUS University, especially next year when BINUS will celebrate 50 years anniversary of our establishment. So hopefully we can arrange similar event together with ACCA and part of integral celebration of 50 years of BINUS University. Hope you guys, especially students, will have a great seminar, get a lot of insight, and some eye-opener information from the speakers. Thank you very much. Have a great seminar. Over to you, Jonathan.
Okay, thank you so much, Pak Gatot. And now we will hear also the opening words from Ms. Hani Karunia as the head of ACCA Indonesia. To Ms. Hani, now time is yours.
Okay, thank you, Joe. Can you hear my voice?
Yes, Miss.
Somehow it's kind of like had a echo or feedback here. Really sure. Anyway, so let me just start. First of all, I would like to extend our warm greetings to Pak Gatot, the Dean of Faculty of Economics and Communications. Thank you for the chance given to ACCA to present and speak with you today at this wonderful event. Of course, that include all the BINUS team, including Ibu Lindawati, the head of accounting program, and also Pak Ignatius Edward, all the ambassadors team, to Jonathan and Gisela. We really appreciate you. Yeah. And followed to our honorable speakers today, Mr. G.B. Greer, the ACCA Head of Sustainability, and also Dr. Dewi Fitriasari, one of BINUS Research Leadership Team, and Mr. Denig, the Managing Director of the Innovation for Sustainability from AWR Llyod. Last but not least, thank you to all the participants today who have made your time available to join us in such an important topic about corporate sustainability accounting in the digital transformation millennium that we hope to highlight before closing in the year to 2020. The year that is full of uncertainty and yet give us some new meaning in the word sustainability amidst the crisis due to COVID-19 that impact all aspects in the society and business. This crisis actually also acts as a catalyst for more awareness on sustainability issues, as there's a deeper level of awareness on some unavoidable truths about business and its impact on society. Well, the global crisis and difficulties that we face have provided many lessons. We need to ensure that together we do not only focus on the recovery aspect, but also acceleration on the transformative process. With quoting a statement from Indonesia Minister of Education and Culture, Bapak Nadiem Makarim, through shared creativity and creation, we come out of this crisis with higher adaptability and innovation. In related with that statement, in some speakers will speak digital transformation with the way for sustainability accounting and the first. Some also will cover from the accounting or finance professional perspective, as sustainability accounting is the key to solving our environmental and social challenges. This also means these professionals need to look from the perspective of all important stakeholders. Finally, this leads to the implementation stage in Indonesia, what businesses have done so far in regards to this issue, which has helped the organization achieve its sustainability efforts. To sum it up, finance and accounting professionals take a very pivotal role in creating the foundation for business framework and utilizing the right digital transformation tools. Having the right technology can definitely help attaining the company objectives in sustainability. But choosing the right technology needs to have the right people as well, not only for making the best decisions, but also to communicate to all of the important stakeholders. Even if a company has optimal asset and financial strategies, if it fails to communicate well, let's say with the capital market, it may not achieve the share price growth that it deserves. I know that the new world appears daunting, but to us in ACCA, change also means opportunity, in which accountants can emerge as champions of progress and modernity as we seek to build better from the chaos of COVID, present a historic opportunity for business to engage more deeply as a strong and positive influence on society. Therefore, accountant has a critical role to play and a self-interest in contributing to delivering the SDG, as businesses cannot succeed in societies that fail. Hence, here we are together with our university partner, BINUS University, which to develop a better understanding addressing the sustainability issues, to invest more interest for a stable and prosperous societies. Hence, without further ado, I present you our speakers of the day and would like to open our webinar. Wassalamualaikum warahmatullahi wabarakatuh. Terima kasih semuanya. Selamat siang.
Okay, thank you, Ms. Hani, for the opening words. Now, let me introduce our speakers for today. So today we have 3 speakers. Our first speaker is Mr. Jimmy Greer. Mr. Jimmy Greer is Head of Sustainability at ACCA. He creates global research and advises on policy issues for ACCA related to sustainability, social impact, and business model innovation. He is a member of the UNCTAD ISAR Consultative Group on Enterprise Reporting on the UN Sustainable Development Goals and is also a member of the Climate Disclosure Standards Board Technical Working Group. He holds an MSc in Globalization and Latin American Development from the UCL Institute of the Americas. Our second speaker is Mr. Brad Denig. Mr. Brad Denig is a recognized expert in corporate sustainability consultant and climate change, and currently being the Managing Director of Innovation for Sustainability at AWR Llyod. Mr. Brad has over 20 years of experience in the field of corporate sustainability strategies with a focus on energy management and climate change, and has worked for over 70 companies on climate and sustainability issues across a broad range of sectors, including oil and gas, power and utilities, hospitality, agriculture, and many more. Mr. Brad developed a global leading climate change and sustainability software platform at Ecova, that now known as NG Insight. Mr. Brad has Bachelor's of East Asian Studies from Lewis and Clark College, and MBA in Sustainable Business and Finance from Portland State University. Our third speaker is Ms. Dewi Fitriasari, or Dr. Dewi Fitriasari. Dr. Dewi Fitriasari is the leader of Business Risk Management, RIG, BINUS Nusantara University. Her professional interests are in sustainability risk and accounting. She is board member of the National Center for Sustainability Reporting and also lecturer of accounting in undergraduate and graduate programs across BINUS campuses. She is active in international and national seminars and was rewarded in Best Teaching Award in 2019. Now, please welcome our first speaker, Mr. Jimmy. To Mr. Jimmy, the time and place are yours.
Thank you very much, Jonathan. I hope everyone can hear me okay. And if they can, that is great. I'm just going to see if I can share my slides, if that's okay with everyone, and then we will get started. So if you just give me 1 second, please. Okay, great. Well, thank you, everyone. And thank you so much, Jonathan, for that introduction. Hani as well, Miss Hani, thank you for inviting me to take part with you. I'm always delighted to work with the ACCA team in Indonesia. And it's been great to work with you so far. And thank you very much for the invitation, Gatot. And I guess most of all, thank you so much to everyone, as Hani mentioned, well, and also to us panelists, but most of all to everyone who's joining. It's so fantastic to see so many people joining this session. And I really hope that together, us as speakers can also interact. I'm looking forward to learning from everyone about what we can do as finance and accounting professionals to help transform Indonesia's economy, to help transform businesses and services, products and service innovation, particularly after the pandemic. And I'm going to share for the next half hour or so a presentation on some research that we've been doing over the last year, which we launched a couple of months ago, looking at why we need to mainstream impact to scale a sustainable recovery. And we did this to demonstrate the role that professional accountants are playing and can play in the future in terms of thinking about how we're going to transform and how we're going to get out of COVID and really sort of move into a new phase. And I think you'll find that there's a lot of information in there which I hope will be relevant to your careers, to your studies, and help sort of with thinking about, okay, well, how can I apply this in this context? And I can share some more updates on what ACCA is doing in this space, not just globally, but in the region as well. And as always, I'll probably start by saying, look, please remember, we're on LinkedIn, we're available. It's amazing for me to be in London now and to be talking to so many of you all the way in Indonesia, and I think in wherever you may be in Indonesia, and that's just for me so exciting to be able to do this virtually. So yeah, keep in touch. So just to introduce a little bit about myself, I'm a head of sustainability at ACCA. I work in a research and policy team, and we are called Professional Insights, and we have an app, and we have lots of research coming out the whole time, looking at different areas. It could be audit, it could be tax, it could be reporting, it could be all different areas, and we all work together. And sustainability for finance professionals cuts across all the different aspects. And I think that's always something to bear in mind, is that actually what we're talking about here is sorry, I'm just going to turn off my oh gosh, sorry, I'm really sorry about that. There we go. 1 second. There we go. I wanted to switch off my virtual background, if that's okay. I'm just going to stop my video. So it's interdisciplinary. It cuts across all different areas of the work that finance professionals do, and it's becoming much more important. People want not just hard information, but they want better risk management of sustainability issues, and that's really, really important. And I just want to share this with you. Earlier this year, sorry, in September, we held a session with a webinar with IFAC, the International Federation of Accounting Associations, for the New York Climate Week. And we had Mark Carney, who was the former governor of the Bank of England, join our session. And he is now working in a special role looking at climate and finance and what are the interactions there. And he told our session that the accounting profession is absolutely essential in tackling climate change. So, you know, this is, for us, this was a big signal. It is absolutely about the accounting profession, about it happening through finance. And if you think about what this means, think about all of the interactions and the actions that are going to be taking place to make climate change and tackling climate change relevant to accounting and finance. Think of all of the activities there. It's huge, and it links also to regulatory change. It links also to physical risks that might be happening from flooding or weather changes. It links also to customer preference changes. So there's lots of different things that are sort of changing the calculus for thinking about, well, if we want issues like climate change to be tackled properly, we need the accounting profession involved. So I hope that gives some sense of the kind of the momentum behind everything. And we're starting to see this appear in people's job roles, in job descriptions of our members, of finance professionals around the world. And we know that this is only going to increase and continue. So to move on to the research, COVID has been called an X-ray, right? It's been called an X-ray on society. It's revealed the gaps in society. It's also amplified the gaps. The least well-off have been more affected. I think we can say that at a global level, but we can also say that it's also demonstrated that, as in the words of the person who quoted this, who's a professor at Cambridge University, Diane Coyle, who's a wonderful author as well, she wrote that COVID has exposed the vast need for building in our societies, to build back, to build forward better, to improve what we've got, to improve resilience. We've created an amazing global economy that is just too fragile, has too many gaps and inconsistencies, and COVID has really exposed that. And I'd suggest that the social and environmental and sustainability issues will just will keep exposing that further. And so we've got a really big opportunity now to make the most of what's going to be happening over the next 12, 18, 24 months, to think about, well, how can we become more resilient and build better businesses and better organizations and better responses to COVID in light of everything that has happened. And that was really the framing for the work that we wanted to do. What is the role of accounting and finance professionals in taking this on? And so this is what we wanted to look at. But just to set a little bit of the scene, you know, we know that income loss over the first 9 months of this year has been absolutely outstanding. I mean, unbelievable, $3.5 trillion of income lost, according to the International Labour Organization. Potentially, we are moving to 1 billion people being in poverty, in extreme poverty, sorry, after COVID-19. Some of these projections, it's a huge step back from the progress that has been made over the last decades. You know, this is global in nature, but we can see that these gains were extremely hard won. So building forward from this is going to be really, really hard. Just shows the scale of the challenge ahead. But we also know that, you know, let's look at this. 30 billion has been estimated to have been lost to natural disasters in the first half of the year by the insurance company Aon. This is on a global level. Actually, the losses are probably much, much, much higher. Climate change, extreme weather issues, and I'm sure many of you will have experienced them in your own lives. It could be air quality, it could be flooding, it could be other things. These haven't gone away. So we've got COVID, but we've also got climate and natural disasters and changes like that. All of these things are still there, and they're something that we are absolutely going to have to take as real, but also as interconnected to build that kind of resilience that we want going forwards. Okay, so we called our report Mainstreaming Impact. And the reason why we wanted to talk about impact was because impact is I feel a really sort of simple way of framing what we want to achieve. And one definition of impact that has been given has been as a measure of an action's benefit to society and the planet. This is about doing something that is a positive, an additional, an intentional change to an activity. It's not just saying, oh, we stopped turning the lights on so much, and so we saved costs in terms of our electricity bill, but we also saved energy and in a sense made a positive contribution to climate change. It's going much further than that. It's about saying, what can we do to create a positive impact, both a social one and an environmental one? And for the account, and the other, I think there's two other areas that are really interesting for us to think about here. Managing impact is absolutely the role, it absolutely sits across organizations, but it sits within finance teams as well, to manage these risks appropriately, to have the controls around them, to think about measurement, to think about monitoring, to ultimately think about surfacing the decision-making information, but also moving into public disclosure and reporting. This sits within the finance team. So, you know, there is a huge role to play. And I think there's another thing which is really important here, and why I like the term impact so much, is that we're not just talking about MNCs here. We're not just talking about the large listed global companies, although they clearly have an outsized role to play. Impact can happen at all scales. It could be for startups. It could be for small businesses. It could be for national champions, SOEs as well, for example. All organizations have a different kind of scale and a different kind of positive impact that they can be making. And there are different levers within there. So wherever you're working, wherever you may be engaging, there's an opportunity for this to make a real lasting difference, and not just build more resilience and make a good contribution, but actually build a better organization. And that's what we're kind of talking about here. That's what's so important. And that is the role that the finance and accounting professional should want to and does play within an organization. So now I'm just going to look at a couple more things that sort of set the scene before going into some survey details from our report that I hope you find interesting. So we did some research with a data analytics company called Data Moran, who I highly recommend you look up online. And they are a software as a service platform that uses natural language processing to scan corporate reports, regulatory filings, all kinds of things to assess the emphasis that organizations are placing on different social and environmental and governance issues, this sort of ESG world that you may have heard of. And we wanted to look at, well, what about what's happening on the social inclusion field? What are companies actually doing? Are they taking this seriously? Because I'm sure you'll all remember before the crisis, and indeed during the crisis, many large organizations have been telling us how they are very purposeful organizations. There are many statements about companies take these issues seriously. But actually, when we look at the data, as we see here, on a scale of 1 to 3, we see most companies in their financial reports and even in their sustainability reporting, they don't seem to be taking this issue very seriously at all, not even achieving a kind of, a little bit over a midway score. So I think we can see that there's a long way to go for organizations to really sort of step up to the plate and respond to what society and government and customers are asking from them, particularly around social issues, but not limited to them. And I also wanted to share this with you to show you about when we're thinking about these issues, when we've got to really think about, for me, it's all about how business can change and transform and really recreate our kind of markets that we rely on. And a helpful tool was created by an organization called the World Benchmarking Alliance. It said, look, let's think about the 7 systems of transformation. We're talking about energy systems, we're talking about food systems, circular, digital, and urban systems. These are the kind of networks, the kind of environments within which our economies operate, our businesses operate. And we need to think about how are all of these transforming? What are the big risks for these areas? You can think about food as having big risks. You can think about waste being needed to be tackled. And we can look at, well, we need more sustainable agriculture. We need more circular business products and services. We need to decarbonize our energy supply very rapidly. And we need to be supported by the financial system with society at the center. These are the kind of tools that I think are really, really helpful for thinking about what the world can look like and how organizations can transform. Where do you want to play within our economies in the future? And if we look at the right-hand side, just to show some examples from a piece of fantastic research that came out a couple of years ago from the Business and Sustainable Development Commission, there are many, many new sectors of economic activity or kind of, let's say, product and service lines which are transforming what we're doing, which have the opportunity to transform. It could be dietary switches, moving out of meats into alternative protein areas, for example. It could be car sharing models to reduce congestion. It could be electric vehicles to reduce pollution. All kinds of things are included in there. And, this is just a snapshot, really. Think about healthcare, low-cost medical devices, telehealth that we've come to know very well, mobile health services, remote patient monitoring, all these things that we've kind of come to know quite well during this crisis as we've had to adapt a lot. All of these areas are, they're there, they exist. There are opportunities for organizations to step into and really try and rethink how they operate and manage those kind of risks, become more resilient, and actually access new markets, new opportunities. And that's where the opportunities lie. And that's where I'd suggest that as we move out of COVID, hopefully over the coming 12 months, we can really think about these new sectors of the economy and think about what's the role of finance and accounting professionals in helping make these things happen, thinking across the business model of value proposition, creation, and capture. How can I, in my finance team, help my organization transform and take part in these new areas of economic activity? So I want to just run through some areas of a survey that we published alongside this research. We surveyed around 1,000 of our members. If any of you took part, thank you. And we also held an online community discussion over 10 days to talk to members in a kind of forum format to think about what are the ways that our organizations are what are the ways that our members think they can get involved to help their organizations change? And I want to share some of the details of that with you now. So really encouragingly, 90% of members believed that organizations must do more to become more environmentally sustainable and make more of a positive impact. They also felt that their own organizations needed to do more to take on social inequalities. Excuse me for the typo in that slide, very bad. But also tackling climate change was a huge issue that was identified as really strong. That's something that their own organizations needed to tackle. Our members felt that 54% of our members felt they had sufficient skills to use them today to help their organizations address social and environmental impact issues. So their skills were very relevant today to tackling these issues. They also felt they wanted to learn new skills as well, linked to social and environmental issues. And interestingly, we looked at a number of areas, and I'm going to look at them in a bit more detail, that members wanted to learn new skills in. And they told us that 62% of them identified sustainability data analytics as the area they would most like to develop further skills in. And I'll look at a few other areas as well. And I think across the piece, we found that members had very strong values. Didn't matter where they were in the world, that they wanted to tackle climate change. They wanted they saw around them issues to do with air quality, flooding, wildfires, environmental damage, nature loss, and the economic impact of COVID-19. And they felt very, very strongly about that. They could see it. These weren't abstract ideas. And they felt that they had a really strong willingness to engage, to use their skills, to think about the financial implications for revenue and expenditures, capital projects, all of the different areas where they felt that their skills could help their organizations do something about these issues in a really meaningful, concrete, and tangible way. They also understood the barriers, right? So, we were realistic to say, the way the world is at the moment is that it's not happening everywhere evenly. Finance teams are not really being engaged to the level that they could be on these issues. And our members working within finance teams could understand what these barriers were. And they could intuitively think about, well, what are the ways I could overcome these barriers? What needs to happen? How do I need to make this relevant to management? What are the different tools that I can use? Maybe do a pilot project, maybe reach out to others to help my organization. And they also could think about the skills for the future. What are the kind of different ways they could use digital? They could think about impact measurement. They could think about leveraging, let's say, integration of different apps into their financial accounting software, for example, that might help with carbon accounting measurement. They could think about all of these areas that they could do. So we felt there was a really strong golden thread between people, our members, and future members like yourselves, having really strong values. They want to change. They want to be involved in these things. Willingness to engage. Members wanted to see this as what they're doing today in their jobs. They could see the barriers. They wanted to overcome those barriers. But also they really wanted to get involved and build new skills. And I want to suggest, we'll just let you know that ACCA is always looking to develop how its qualification looks at these issues, what its continuous professional development offerings are around these issues. And so those are things that we are very committed to building. We have a number of milestones in place to make sure that we meet that demand, because we know that the market is also looking for those skills as well. So just to share a slide on, when we looked at and asked members, what areas do you think professional accountants should be involved in to help their organizations build a greener and more inclusive world? What was so interesting for me was that members were thinking about environmental and social risk management. They wanted to be able to do that better. They wanted to measure social impact alongside financial returns. They wanted to look at the data analytics piece that I talked about. But this kind of we think about environmental dependencies as one that came up really strongly, understanding and accounting for them. This is such an important area. Just to think about, do I know my exposure to environmental issues? Well, actually, no. If your organization doesn't know what its dependencies are on nature, on environmental goods and services, well, it's going to be in a pretty bad position, right? If those are impacted in any way. And what about social issues? Does it have an understanding of what those social issues are that it's impacting on? I'm talking about those social inclusion pieces that we looked at earlier, workforce issues, labor issues, community issues, its role within society. These have not just, let's say, production and manufacturing risks, if you have environmental, let's say, goods and services that you're using, but also reputational and regulatory risks that are very, very obvious and that are only going to increase. You're also going to have an impact for the amount of capital that you're going to be able to raise. And those are things that we're probably going to touch on more in the future. So I think these kind of things are really important for us to think about. What's the future role, the very near-term future role of professional accountants and finance professionals going to look like? And it's going to look like managing these kinds of areas. So it's going to add on these to the kind of digital and traditional risk management, traditional support and partnering within an organization. And it's thinking about these areas in addition to all of those as well, and how they are integrated into the role of finance teams. And I wanted to share one more piece, which I thought was really interesting on this, which is that when we ask members, how much of a role do you think the finance team should play in building a more socially inclusive and environmentally sustainable future for your organization? Members were telling us that actually they want to support the work of others in this. Some, sure, wanted to lead. They wanted to lead the way. But actually, the vast majority of age groups, and this was echoed around the world, wanted to support the work of others. And for me, this was a real high, and this was echoed in how when we talked to members and interviewed them about this, they want to help others within their organizations, partner with them, support cross-functional initiatives so that different parts of their organization, and they have such a unique view across the business, across their organizations they're working for, can achieve their goals on sustainability. And that is, for me, such a strong message that intuitively finance teams and our members could understand that their role is really to empower others to achieve what they can and use finance as a tool for making that happen, for making that transformation happen. And this is something that I think is a really strong opportunity for everyone to think about when they think about their future careers. That the need to be able to collaborate, have the softer skills as well. It's also so important to be able to work together in a meaningful way that is cooperative and collaborative. Has never been more important. Just to sort of think about that cross-functional thing a little bit more, some quotes from members, it's all about collaboration and helping to make the business case through bringing those finance skills into other people's problem solving. It's about thinking about finance as a think tank for issues, offering those perspectives and analysis. And it's also about having that kind of cross-functional view, thinking about this isn't just a sort of siloed thing that's happening for a specific department, external affairs, whatever. If it's through finance, it can actually become really operationalized. And that's what we want to be getting to. That's the kind of area that we want to be ending up on. Just a couple more areas that I think, if we're sort of projecting into the future, what are the kind of areas that we think members and finance professionals are going to be working on? Well, we think they're going to be looking at a whole new set of sustainability and impact metrics. There's a whole new kind of, it's not necessarily a vocabulary, but it's an understanding that these sort of data points, these pieces of information are important, and they need to be managed properly, they need to be governed properly within the organization, and they need to be able to be used for decision-making purposes by the organization. So they need the finance team to help with that kind of strategic view and that that sort of reliability around those bits of information so that action can be taken. Also thinking about, well, what is value, right? What is the value of this organization? Not just in terms of kind of basic understanding of profit and loss and what are kind of the financials might be, but what are the other types of multi-dimensional value that an organization creates? It's resilience, it's different sort of things that mean that people actually value what it is. And there are many different ways to think about value, and we start to think about it in a more longer term, wider view. We can see that actually the finance and accounting professional has a really strong role in managing that kind of value, that total approach to value that an organization has beyond the numbers, which of course are super, super important for the organization's health in the long term as well, and being able to achieve these goals. But the other, just to come back to, is that we know, and we can see this happening in many spaces already, is that if we can bring the data work that finance and accounting professionals are already undertaking in their work, and we add in some layers for environmental issues, environmental risks, social issues as well, we can start to sort of build this picture using existing platforms and pieces of software that organizations are doing to sort of better manage those risks, to better understand those opportunities. And this is where it's all heading towards, or it's not the only piece of the puzzle, but it's a big piece of surfacing that information and helping people make better decisions. So I just want to finish on a couple of things, and that is, for me, for you, my calls to action are really think about how what you're learning today can be important for tackling these issues right now. There are many ways to think about what you can do to help organizations, and organizations are looking for this from their finance teams. But having said that, there's also a lot out there that you can learn, both that's available from ACCA and that's available from other sources around this new kind of literacy around sustainability issues. There's a lot of stuff out there, and it's great to find out about it and to sort of build those skills. And I think the other area would be, we think about COVID and we're thinking about the social impact areas and the problems around that. It's a really great opportunity for individuals to reach out to other organizations. And if you're a student, to maybe find smaller organizations that you could help improve their social impact right now. Try and understand what those kind of issues are on the ground so that you are connected with civil society in a way that actually builds your skills and your understanding as a finance professional, because these are really valuable insights that you can bring into organizations as well. And I think finally, when I think about organizations, what do we want to see from organizations? We want to see them committing resource within their finance teams to engaging on these issues. We want them to be reporting on these issues much more, both externally, but also internally. And the other area that I think is important is we want to see organizations step up and finance teams step up and be part of multi-stakeholder coalitions that are tackling big issues like climate change, like waste, like pollution, like air quality. We know that if finance teams get involved, these issues can be solved more. So I really want to see organizations stepping up. And I think when you see that, that's a great signal that this is something that's being taken really seriously. And we need to understand that by tackling issues as a group and thinking about things like pre-competitive alliances or whatever it might be, we're able to move markets further, faster, but also engage much more with real issues that civil society are facing, not ones that we've just decided are important for our own organizations. And so just to leave on a couple of things, ACCA has been doing a huge amount of work over the years on these issues. We've got many reports, videos, and other pieces that you can access on our website. You can download our Professional Insights app. Here are some things we've been doing on the Sustainable Development Goals, which many of you will know about. The 17 goals, which were agreed 5 years ago, looking at all different issues, interconnected social, environmental, and institutional issues around climate change and social impact. And we've produced lots of work on how you can practically get involved in these kind of areas now. We've also partnered with the CFA Institute on a report called Social and Environmental Value Creation, looking at these issues as well. And also working with the public sector and looking at things like responsible procurement and how governments and SOEs can get involved in this. There's lots of stuff we've been doing. There's lots of stuff out there. And if you're interested and inspired to find out more, please do, and please get in touch. And with that, I will hand back over. And I just want to say thank you very much for your time. I look forward to the rest of this session.
Okay, so thank you, Mr. Jimmy, for the materials that you present for us. Now, please welcome Mr. Brad Denig as our second speaker. To Mr. Brad, now the time is yours.
Okay, thank you so much. And thank you to Mr. Greer for an excellent presentation. This presentation that I'll go over here will pick up on a lot of these same themes. So there's going to be a lot of consistency from the previous presentation. And we'll go ahead with the slides now. And are you able to see the slides yet? Okay, great. Yeah, so today's presentation, and again, thank you for the invitation and for the excellent presentation that preceded this. So our focus here is accounting for impact, and that sustainability-focused accounting is key to solving our environmental and social challenges. Next slide, please. Great, thank you. So very briefly, we'll introduce A.W. Llyod and a bit about myself, and then an overview of corporate sustainability and what is the imperative for action. And then end the presentation on the future of corporate sustainability and how accounting for impact is really fundamental to solving many of the challenges that confront us. And again, very consistent with the previous presentation. Next slide, please. Okay, yeah, so just very briefly about A.W. Llyod. We have a 20-year track record. We're a corporate strategy consulting firm and an M&A transaction advisory firm. We've been in Indonesia. We have a track record in Indonesia over 10 years, and in 2019 opened our rep office. You've completed over 400 assignments. Our focus is very bespoke and custom. Our clients really look for us to provide them innovative ideas about how to navigate disruptive megatrends such as climate change, the pandemic, etc. And along those lines, in 2018, A.W. Llyod started an innovation for sustainability practice. And the fundamental reason for that practice was to recognize that a core driver of corporate value as we look out the next couple of decades will be innovation for sustainability, that companies are expected to really innovate and solve these environmental and social challenges, right? These are no longer just public sector issues. This is really front and center for companies to be figuring out a way to have a big impact. So because of that, A.W. Llyod created the Innovation for Sustainability service. I guess just very briefly on myself, but there was an intro already. Spent my career in corporate sustainability and climate change, first starting over 20 years ago on human rights in the supply chain, and then eventually moved on to do energy and climate change strategy, which I currently focus on today. Next slide, please. So this next section is the imperative for action on corporate sustainability. And we'll go ahead and start in an unconventional place for a sustainability presentation, which is a more traditionalist view as espoused by Milton Friedman, famous American economist. And from his perspective, in a free market economy, there is one and only one social responsibility of business: to use its resources and engage in activities designed to increase its profits so long as it stays within the rules of the game. He's had obviously a huge influence on thinking in American, but also global business. And that last part of the sentence there, so long as it stays within the rules of the game, is quite important as we move to the next slide. One thing to recognize is that the rules of the game are changing. Sorry, next slide, please. The rules of the game have changed dramatically from the time of Mr. Friedman's quote, I would say. If we look on the left, this is a quote from Larry Fink, the CEO of BlackRock, the largest institutional asset manager in the world. And he has had enormous influence on getting investors and businesses to really understand the importance of sustainability. And in one of his recent letters that he sends to CEOs of all companies that they invest in, every company must not only deliver financial performance, but also show how it makes a positive contribution to society. Without a sense of purpose, no company can achieve its full potential. Along those same lines, in 2019, a very influential group called the Business Roundtable, and the members of the Business Roundtable are CEOs of the largest companies in the world, and they announced basically what was the end of shareholder primacy, that the purpose of a company needs to be not just for the benefit of shareholders, but for the benefit of all stakeholders. So customers, employees, suppliers, communities, and shareholders needed to be focal in terms of benefiting from the purpose of a company. Next slide, please. So why have the rules changed for business, right? They have changed considerably. What is the main reason? On the one hand, we've, just looking at the last 4 decades, it's been remarkable progress. On the left-hand side, you can look at world GDP per capita from 6.3 trillion to 11 trillion. The middle class is now roughly 50% of global population. Literacy rates have increased significantly. And then when you look at the right, the global population living in extreme poverty has gone from 42% down to 9%, which is extraordinary. The mortality rate, 65 out of 1,000 infant births in 1980 to just 29 in 2018. And life expectancy increasing over 9 years from 1980 to 2015. So these are all positive in terms of the progress that's been made under an economic model that maybe didn't necessarily look at the impacts of a company in the same way that's expected today. So as we move to the next slide, you'll now see that, okay, while we've had a lot of progress, this progress has taken a toll on the planet. So if you look there on the left, under economic growth, you see global population growth, global GDP, and direct investment. So this is a lot of the fuel behind all of this GDP growth. If you look in the middle, though, when you start looking at just a few examples of consumption growth, water, paper, transport, it's been pretty extraordinary and has mirrored the economic growth that you see on the left. Well, then if you look at the third column, now we start to think about what are the consequences of all this growth? And these are, again, just a few examples. But if we look at the rate of increase in deforestation, CO2 emissions, which are now far in excess of what's shown here, and biodiversity, the number of species that are extinct, and then those that are under threat is even more significant. So those consequences are substantial. And then on the right, what you'll see here is one way to document this, which is that in 2020, we are using up 1.6 times, 1.6 Earths, meaning the biocapacity of the Earth, the ability of the Earth to absorb basically, the waste generated from our society. Now, by 2050, that number in terms of our consumption will be 2.5 to 3 times what the Earth's biocapacity is. The devastation that will wreak on ecosystems is profound and quite worrying, and is part of the reason why there's a real push, not just on climate change, but on biodiversity and other issues to really ramp up our efforts. Next slide, please. So again, this is just a little more explanation of what are the consequences. and again, Mr. Greer's presentation documented some of this already. So in climate change, we've seen extensive amount of damage. Conservatively, there are 400 deaths that are attributable to climate change. Under resource use and waste, I think this is a very interesting statistic here, that resource extraction and processing cause over 90% of biodiversity loss and water stress, and more than 1/2 of global climate change impacts. It's pretty stunning to think about. When it comes to water scarcity, there are more than 2 billion people currently that live in countries under high water stress. And then lastly, biodiversity loss. 150 to 200 species of plant, insect, bird, and mammals go extinct every 24 hours. This is 1,000 times greater than the natural rate of extinction, showing the impact of what's often called the Anthropocene, the age of really human dominance. And biodiversity loss in Asia alone could reduce global GDP by 18% in 2050, up from 3% in 2008. So key message here, right, is that while on the one hand, our economic models and thinking have produced extraordinary growth and benefits, it's come at a real cost. Next slide, please. And now, as we really awaken to the damage that's been done and the need to change course, and to change course in a very significant and urgent way, there's an opportunity. And that opportunity, and I do like this quote from Dr. Jonathan Foley of Project Drawdown, that this may be the single biggest opportunity in human history. We literally have to reinvent our energy systems, our manufacturing, our cities. And by this, he really means sustainable development in solving climate change. And we've documented 5 areas that in particular we look at. There are others, but I think these capture a lot of what the opportunity is. So one is low carbon businesses. So that's $2.1 trillion of opportunity in green manufacturing, product, and green financing. The Sustainable Development Goals, there was a report recently documenting that this is roughly a $12 trillion market opportunity by 2030. Natural capital, investing in conservation and reforestation activities. About $400 billion of annual investment is required. And then on circular economy, that this is an additional economic output of $4.5 trillion by 2030 by taking a circular approach and lens to our value systems. And then on the energy transition, roughly $800 billion of renewable energy annual investment is required to align with the Paris Agreement, or the 1.5 to 2 degree cap in temperature rise. So again, a very significant opportunity. And when we go to the next slide, you'll then see that this opportunity is really beginning to catch on with investors. And again, I'll quote Larry Fink, again, quite influential investment professional, that the demand for ESG, environmental social governance, is going to transform all investing. Important to pay attention because they are the world's largest asset manager. Now, if we look at the left on this slide, you'll see in 2007 that gray circle there, right? That's $70 trillion of assets under management for the top 500 asset managers globally. But if you look in 2007, if you add up the dark red and light red, that's all the assets under management for sustainable investors that align with the PRI, the Principles for Responsible Investment. So not a large percentage, right? When you now look at 2017, now add up the dark red and light red and compare that to the total AUM for the top 500 asset managers, which has increased to 90 trillion, but well over the majority is managed with sustainable principles. So that's pretty phenomenal growth across the board for the amount of assets that are managed sustainably. And PRI deserves a lot of credit for that. We'll move on to the next slide, which is going to document some portfolios, right? This is just a few examples. ESG portfolios relative to their benchmark. And again, just thinking from the investment community, why is there so much focus on ESG, which is growing extraordinarily fast? And I would point to, yet again, another BlackRock document in 2019, February 2019, called ESG Why Not? And there they looked at ESG portfolios back tested across all markets. And they were able to see that ESG portfolios consistently outperformed. And certainly there was no penalty for managing assets within ESG lens. So if you look here at the middle example, Calvert Emerging Market Equity Fund, that's an example of one that's had pretty significant outperformance against its benchmark. Some will be less significant in terms of the outperformance. But the consensus is there's no penalty to pay for managing assets that focus on ESG, and often there's an outperformance, and then certainly they're in demand. So we'll go ahead and move on to the next slide, please. So that first section then was corporate sustainability and the reasons to act, right? That there's been tremendous impacts, a lot of growth, but it's come at a price, and that investors and businesses are recognizing that there's tremendous opportunity in innovating to solve some of those challenges. So now as we look forward and we start thinking about how to account for impact and how this accounting will help usher in that innovation for sustainability, what exactly does that look like? So we'll go to the next slide. And this slide is really talking about that there's this period of shareholder primacy where shareholder focus, that inner circle, the dark red inner circle in the slide, that's been dominant for a long time. And as the Business Roundtable had suggested, that's changing, right? Where now we really need to, as a company, value creation, long-term enduring value creation is going to happen by taking a much larger view of all stakeholders. So if I go now into that inner circle of shareholder focus, there's still two core fundamental drivers of growth and value generation: your asset and investment strategy, and then your financing strategy and the consequences of those decisions, both on asset and financing strategy. And then as well, how you communicate that to investors. Well, now you need to take those same elements and say, on an asset strategy, where does your company have the most impact on the environment, the most dependency, and also the biggest opportunity to have a positive change, right? So if you're an energy company, a lot of greenhouse gas emissions, the environment is where you're going to have the most material opportunity to innovate and create positive change. So again, we can apply the same principles of a shareholder focus and expand it to all stakeholders. And we can do the same thing for social inclusion that I thought was quite interesting from the previous presentation. If you're a telecommunications company or an education company, how can you make sure to enhance digital inclusion for rural communities? That can be something that you start thinking about those stakeholders, and how do you innovate and design your business to create opportunities for those stakeholders. So that's kind of the framework we use for how we see things unfolding. As we go to the next slide, I'd like to now back out a little bit in terms of showing, thank you, that as we go forward, again, value creation from sustainability is largely going to come from innovation and strategy. Whereas perhaps in the past, it was more predominant to look at sustainability as a risk management, right? Or a reporting obligation. And if we look at this slide, in the bottom left, we had corporate social responsibility that was maybe more dominant in the 80s, 90s, even early 2000. But those were kind of CSR programs that would provide funds after a company's profits, right? And they could be strategic, but that wasn't the intent necessarily. It was often there's some public relations component of it, and certainly meaningful projects. But again, it was money after a company had made a profit. When you go to the middle, when you talk about corporate sustainability management, now we're focusing on how a company earns a profit and how they seek to account for all environmental and social issues and then establish targets on how to reduce their impact. But it's still a risk management point of view. It's still managing their impact. Now, as we go to the right, again, this fundamental thesis that it's an innovation for sustainability approach that's going to also bring in other departments in a company, where you're really going to be focused on how do we create new products, markets, and services that, again, solve environmental and social issues. So the focus there is on solving these issues. Next slide, please. So that's all good, yet capital, I would argue, is not moving fast enough to solve the various environmental and social issues that confront us. Certainly with climate change, it's picking up, but it's been true. And I think with biodiversity loss, that's another issue that we're going to have to confront and begin to move more capital to solve these issues. So part of the problem, I'd argue, has been the quantification of externalities. On the one hand, non-financial returns of projects, so call it the environmental, human, and social capital impacts, are rarely quantified by investors and management. Even till today, this is, I think, largely true. On both the benefit side, so projects that generate a lot of environmental, human, social benefits, they may be overlooked because those benefits are not quantified. That impact is not quantified. At the same time, the risks of a project or new potential investment that generates significant liabilities or significant risk from an environmental or social point of view, those are rarely discounted properly. So part of the problem, because again, we need to move quite quickly to solve some of these challenges, is an issue that we don't quantify these externalities appropriately. The solution, and this will be the last few slides that we'll go over here today, is that the solutions are evolving in terms of the frameworks and tools to account for these impacts. So on the one hand, we have climate change, and I'd say one of the most essential has been what's called the Task Force on Climate-Related Financial Disclosures. And that's a framework that addresses the full spectrum of risks and opportunities from climate change, both to an investor's portfolio and to a company and its assets. Natural capital. So there's a similar framework that's in development called the Task Force on Nature-Based Financial Disclosures. And that's really looking at corporate dependencies and impacts on natural capital and biodiversity. And then lastly, sustainable development. So we do see more initiatives on how to track impact valuation and then using the SDGs as a framework, the Sustainable Development Goals as a framework to understand impact. In one framework we like is SDG outcomes. So anyhow, this is a key slide and a key concept, I think, in terms of what is the problem and potential solution. And now we'll go to the next slide and just cover very briefly some of these tools. So the first here is the TCFD. And this tool has been remarkable in this framework, I should say, for helping more C-suite level individuals understand how to think about climate risk and climate opportunity in their business. So on the left-hand side, you'll have all these different risks, how a company could be impacted. It could be policy, legal. It could be a carbon tax or pricing per ton of carbon emissions. It could be a reputation risk. You see this in some industries. I'd say, for example, Exxon in the US is suffering some reputational risk for being a laggard on reducing carbon emissions. At the same time, it can be a benefit to those that get ahead of the curve. Technology shifts. So if you're in the energy sector and renewables are becoming more attractive, that's a potential risk to you if you don't have a strategy. Right? So it goes on and on in terms of what are the different risks and how might they impact you over time. That's largely driven by the market and technologies evolving to solve climate change. And then on the flip side of that will be, okay, well, what are those opportunities that will allow us to address climate change? And then the framework then kind of feeds into the system to do a scenario analysis And then you're able to start quantifying what are the financial impacts to our business today under a number of different scenarios based off of how fast we decarbonize and how might that impact our income statement, our cash flows, our balance sheet. Might some assets need to retire early, and how will that impact our company? So a very influential framework that's done a tremendous amount of good on the climate change perspective. Next slide, please. So the next is Task Force on Nature-related financial disclosures. This is in an earlier stage, but the focus here really on the TNFD is there's a data gap for finance to really understand the dependencies of different industries on nature, right? You know, if you're in pharmaceuticals, what is your dependency on nature and plants for innovation and new medicines, right? Agribusiness, obviously, you have a dependency on nature. So there's dependency risk, there's transition risk. If you're in an industry that is in the middle of deforestation issues, it can be difficult to certify your product in key markets, right? So there's a transition risk there. And then there's systemic global risk, right? And as we've seen with COVID-19, which is a zoonotic disease that is, you know, largely driven, or there's a correlation at least, between deforestation, wildlife trafficking, and exposure to these type of diseases and coronavirus. So this particular framework will likely have a big impact, but again, it's too early. It's still in a design phase, as you can see from the bottom of the slide. It won't be for another 1.5 years, perhaps, before this is fully rolled out, but we think it'll have a large impact. Another slide, and nearing the end here of this presentation. Next slide, please. So I want to leave at least this framework bit with this particular slide from the Future Fit Foundation. As we look forward, and again, we will need to move quickly to solve some of these environmental and social issues. What this slide is essentially saying is that, you know, on number one, assessing company performance relative to a past year doesn't really tell us where a company is going, right? So if our greenhouse gas emissions fell 1% against last year, that's helpful, but it's limited in terms of where is this company going? Does it have a strategy to reduce emissions dramatically? And number two is sometimes we focus on best practice within a sector. And that can mean that some companies are just looking to, or working to be least bad, but they're not necessarily addressing the core issue or core materiality sustainability risk within that sector, whether that's agribusiness and deforestation, or it's a power company and the need to move quickly into renewables. So then third, you have progress towards short-term goals matter insofar as they align with the right long-term aims. So what this can really mean is, let's say you have a target to reduce plastic consumption 5%, but you're in an industry where in reality you should be reducing it 50%. Well, on the one hand, it's fine that you get some recognition for having a target to reduce your impact a little bit, but relative to what is really needed by your industry, it's insufficient. So there's a lot of ways that corporate sustainability accounting may miss the bigger picture of what is that company's allotment, if you will, of natural resources it can use to stay within a planetary boundary versus what it's currently using and or what it's currently projecting to use. We need to make sure that companies and industries have reduction targets for greenhouse gas emissions or resources that align with planetary boundaries. And the Future Fit Foundation, I think, does a great job of explaining to industry what those boundaries look like. Next slide is my last slide for today. And again, thank you for your attention during this presentation. I hope it's been valuable. I just wanted to leave with expectations of business going forward and kind of wrapping up some of the key themes that we discussed today. So shareholder value, again, was kind of where we started, that the business and environment and society, yet essentially separate, and there's the ability to externalize impacts to the environment and society. We've then gone to shared value, where there is some overlap and business looks to have a positive impact on environment and society. But going forward, and again, we really do need to innovate to solve these challenges. It will be a system value approach, where business really does see itself as having not just a shareholder, but a full stakeholder focus in creating solutions within its ecosystem. So with that, I'll end my presentation. And again, thank you very much for the opportunity and your attention. Thanks.
Okay, thank you so much, Mr. Brad, for the materials that you present to us. Now, please welcome our third speaker, Ms. Dewi Fitriasari. To Ms. Dewi, the time is yours.
Okay, thank you very much. And thank you for inviting me to be part of this seminar. It's been my pleasure to be here with all of you and also of the students beside the practitioners in this seminar. And thank you for the wonderful presentations by the previous two speakers, Mr. Greer and Mr. Denig. And now in this presentation, we will take the issues of sustainability and accounting into the Indonesia context. And of course, we will also refer to the previous two presentations and conclude the seminar. And hopefully we can just then after that go to the discussion session, in which I'm quite sure that you are very eager to reach that point. So let me share my screen now, and I will limit my video now. Okay, thank you for your patience. And in this third presentation, we're still talking about the sustainability in accountants. And as I stated just now, we are going to explore the practices and potentials in Indonesia. So by right, as accountants and also students of accounting, you will think about the role of accountants in a way that accountants should care about the bottom line, about the profits, in which I will say that it's valid. It's a valid reason, just like what Mr. Denig previously already showed you, a quote from Mr. Friedman that the responsibility of a business is to make profit. But what is the rule of the game that is being played now? It's changing, and it's changing fast from just profit-oriented businesses into sustainability-oriented businesses in making profit. So this is something new. This is the new approach that we are discussing about. We are discussing about where are you then as accounting students and as the future accountants will be under such environment, under such leaderships of business strategies. So that's what we are going to discuss now. So I hope all of you can see the shared screen. I will check first the chat system because I see that there are some comments in the chat system. Just want to make sure that it's not directed to me. Okay, it's not. Then I will continue with my presentation then. So previously, we discussed about how the situations change globally across nations as presented by Mr. Greer, and also across these companies, including in Indonesia, actually, as presented by Mr. Denig. And with these two insights, then let's have a deeper look on what happening in Indonesia in different industries. So our challenge now, as what all of you already understood, that we have this common challenge in Indonesia as related to COVID. We see decreased income due to COVID, and the decreased income is very significant. It's 83% of decreased income for companies, with only 15% manage to have stable income and only 2% have increased income, and these 2% will be related to industries supporting the COVID management. It's not the kind of industry that any company just diversify itself into the area in one night or 2 nights, in 1 week or 2 weeks. So there is a barrier of entry there. But I also say that companies are moving at least to provide what they can do, and we'll discuss about that in the later part of the slide. So this is what we have now in Indonesia: decreased income, mostly 83%, and only 15% able to maintain their stable income, and only 2% can report increased income. And what will be the top 3 impacted industries in Indonesia based on demand? The first one negatively impacted will be the accommodation and also food and beverage. Those two comprise of significant industries in Indonesia, and 87% of them are negatively impacted. And remember that the information that I'm sharing with you now is industry clustered. And other services, 85%, transportation and warehousing, 85%. So you can imagine that those companies that you will normally see as a very outstanding companies now in terms of the greatness in profitability and in the revenue to represent the company size, those companies are greatly impacted from COVID. Now, if you imagine then, how will those companies able to bounce back? I would like to present to you now that there are 2 aspects to be able to bounce back. The first aspect will be the behavioral aspect, and the second one is the financial aspect. What I'm presenting to you now is the behavioral aspect from a case study that I happened to finish and also published together with other authors. And it is in F&B industry. There are some aspects here that we studied. The first one is from the introspection and common sense, the ability to understand regulations. Before COVID, the people who are involved in the study will say that they understand the regulations, operational regulations in the entity. But they also stated that existing regulations are already too complex to be accepted logically. Now, this is a condition that should lead top management to think about how they can help their employees to move to newer regulation and newer conditions in operating their businesses, as there will be new regulations, there will be new practices that these people will need to understand. And when we ask further about the implementation stage, about their perceived ability to implement the regulations, before COVID, they will say that they can follow the regulations because regulations are just like recipes. You just follow and put everything in order, then it should be right. But at the same time, they also fail to understand more complex regulations, as many deem as illogical, in a way that they are not necessary to be that overly complex for them to understand. And remember that this is before COVID. In terms of their own cognition and complexity, their own perception on their cognition and complexity of the regulations and how they handle complexity of regulations before COVID, they already stated that it is difficult to understand due to language and the length of regulations. And the challenge will be in the cost and benefits of the regulations itself will not be considered. It is not considered before, and it will not be considered after, because basically the language barrier is there and the length barrier in terms of the regulations are already there. They cannot understand complex regulations. And the behavioral challenges do not stop there. It continues with the emotions and complexity factor, in which we are referring to the belief in controlling situations. Now, we find that the people who are involved in the study, they got mixed locus of control. And the challenges then for the top management to bounce back after COVID will be about controlling the stress caused by the regulations, because some people, they have some level of confidence that the external situation are all under their control, but the rest, they simply don't. They simply think that the world is not within their control. External situations, including regulations, operational regulations, are not under their control. Another behavioral aspect is related to motivation and complexity. And before COVID, they stated that they are motivated to learn. And this is a majority opinions, majority perspectives. But at the same time, they will still say that the complexity of the current regulations is perceived to be unnecessary, in a way that it induces incoherence and that they motivate them to understand further on the cost and benefit for applying the regulations, and also to learn further about how they can improve the current regulations. When it comes to the social effects and complexity before COVID, we find that social leaders play important roles, because social leaders in the workplace will be the base or the reasons for others to follow regulations. And of course, then the challenges is to maintain supports from social leaders. Why? Because from our previous study, as related to the previous aspects of behavior that I presented just now, these social leaders also have their own difficulties to understand and to manage complex regulations. So maintaining supports from the social leaders is technically a challenge for any top management. But of course, a case study cannot represent the whole industry, but it is a snapshot about what can happen in an entity when it is related to regulations under the situation of COVID. Now, the other challenge that I already mentioned is related to finance, the capital. The data that I present you now is industry clustered. So 84% of the processing industry studied by the BPS, that's the statistics department of Indonesia, they state that they need capital due to COVID for them to move on with new projects. And mining industry, 73% of them are impacted in the same area. So where will it lead us then in terms of sustainability practices? If we are referring to the mining industry and processing industry that are now impacted by COVID-19 in terms of the capital, we can see that pre-COVID, which is in 2019, so I'm talking about what they did in 2019, mining industry will care for community infrastructures, hospitals, schools, and they will also care about environmental conservation that related to the business environments, that related to the ecology of the business environment, and they will also care for community education and training to enhance the society, to enable them to have a better access for livelihood and also better future with the company. Sometimes they design it that way. And for the processing industry, that is also impacted in capital-wise, as in the slide that I showed you before. Pre-COVID, in 2019, they will mostly do environment-related cost saving by saving electricity, changing to technologies that will enable them to produce with less electricity. And they will also handle community training and education. They will also deliver programs in that. And there are also efforts to source responsible sources, not just organic sources, but also responsible sources. Now, I would like to remind all of the audience to deactivate the microphone while you are listening. Thank you very much. And let's continue then. What is happening then during COVID-19, which is in 2020? The sustainability practices here got new initiatives that companies rush to do. They need to support the government and they need to support their businesses in a way that they are able to continue with their operations. They want to make sure that COVID-19 will not affect Indonesia in a prolonged way. Now, whether it is effective or not, of course, depends on all parties involved. But here are some noticeable new initiatives from the mining industry. The first one is the hospital supports. And these hospital supports will be usually done by mining companies that already have hospitals, already built hospitals in the area that they are operating. They will build more ICU units, and they will also provide more tests, not just for the employees, but also for the local community. And they also support community retraining to retrain them because some livelihood just diminished because of COVID-19. We have discussed before the types of industries that are negatively impacted by this COVID-19. And that also include employee retraining to fill in the time gap that they somehow got to experience due to the reduction of the work activities in the companies. And in the processing industry, the noticeable new initiatives similarly related to community retraining, but there are also differences there. Processing industry, they try to diversify into the areas that are related to COVID supporting business areas such as making maskers and then making the hazmats. And also there are supplier resourcing, because the suppliers that they used to depend on not necessarily able to provide them, not with the products, because the products are there, but not necessarily able to provide them with more flexible state that can adjust to the current businesses that they have now. So that's the condition as related to supplier resourcing here. Now, then I bet all of you start to ask a question that what will be then the role of accountant? In the previous two presentations, it has been mentioned again and again that accountant's role basically is to support, make things happen, make it possible to happen. What is it here? The sustainability efforts, the sustainability activities, the sustainability dream of the whole nation, and it starts from an entity. And I would say that in Indonesia, the roles of accountants will start with the budgeting. Normally, it is budgeting 100%. It will start with that. But why not explore to shift into strategic budgeting? What is strategic budgeting here? It is related to how capital and sustainability can be connected. It is related to how the allocated fund, allocated capital can help to develop businesses by embracing sustainability. That is the key there. So if you recall from the presentation done by Mr. Denig, that there are projects as related to climate change, that there are technology in need for those. And as accountants, you don't go to those project managers to ask and insist whether an equipment is CapEx or non-CapEx, where the project managers are not even in accounting or doesn't even have any accounting background. And so what you can do as accountants, I think you need to shift into a strategic capital and sustainability budgeting. In a way, you make the process to connect the dots that's into a seamless process, in a way that nobody else need to think whether an equipment is CapEx or non-CapEx. It's there, but justify the index, the performance index, and so all of the money allocated there can be responsibly justified for the spending. And therefore, the monitoring and control system for the sustainability programs will be an important effort to establish, and accountants are pretty much trained well for this, the establishment and also the implementation of monitoring and control system. You can relate it to your own budget implementation for that, to make things make sense for you, for accountants. And accountants can also help to improve the disclosure quality, as accountants are also trained very well in disclosure and transparency and validity about how data can be presented in a way that it's not containing promises, it's not containing advertisement, but instead it's containing facts about what have been done and what are the impacts and what will be in the future. So those are the things that I think accountants in Indonesia can try to develop themselves And how about you, accounting students? Maybe you will think that all of these are not related to you, but I will say that all of these are related to you in a way that as students, you need to be aware of the importance of sustainability to support businesses. And then you need to be aware on the ethics of the point of which you can talk about profits. What is profit without sustainability? What is profit through sustainability? And which one is possible for the company to do? And whether the gains of the company is really in the sustainability for profitability or just profitability. You can argue about that, but trust me that the ethics that you need to understand there is related to how you can understand the reasons for an entity to embrace sustainability and justify the profitability if we are talking about profit-oriented company. And for that, you need knowledge. And this knowledge are knowledge related to what is happening in the company, what is important to be done in the company as related to sustainability, and what makes sense for the company in terms of the resources to be allocated to support the sustainability. And of course, when we are talking about knowledge, it is also important for accounting students to get used to share your knowledge, because when you share your knowledge, then you will develop your knowledge. You need to start talking. Talking to whom? You need to start to talk to students from different programs. What do they think about sustainability? What is their perspective? What are their perspectives about sustainability? Is it different from you? Can you see your role there in the future, in the near future, once you graduated from the program? So these are the things that you can try to do. And that will be the end of my presentation. And I believe now it's time for the discussion session. I thank you very much for your attention.
Okay, thank you so much, Miss Dewi and all speakers. Now this is the time for the question and answer session, and I would like to invite my friend Gisela to guide the session. Now, please welcome Gisela.
Okay, thank you so much, Jonathan. So we are gonna start the Q&A sessions now. The sessions will be run for 30 minutes maximum. But before that, let me introduce myself first. My name is Gisela Septi Aspasya. I'm Binisian 2022 and also ACCA student ambassador. Okay, today I'll be your moderator for these sessions. So for all the participants who have questions related to the topics, you can raise your hands, then I will unmute you. Or you can also write down your questions in the chat box, then I will help you to read the questions for our speakers. Okay, so you can start to write your questions now. Okay, we will wait.
And if you excuse me, Gisela, I would like to remind the students and also all participants who would like to comment or ask questions that if you are more comfortable to speak in Indonesian language, that will be fine, that will be translated, and even the answer, I think, can be translated. I will help in that too, Gisela, if you are busy with the moderating of the discussion session. Thank you.
Okay, so we have first questions. This is from Aline, and the questions is, she wants to ask related to one of four WeekNYC global value chains, how we can use TCFD to reduce the disruptions in the global value chains as the extent and nature of sustainability transitions, which lead to sustainability, equality, and a development world. PS, correct me if I'm wrong. Okay.
Hello, that's a very good question. Thank you, Gisela, for sharing that. Thank you, Elaine, for your brilliant question. I think maybe if I start and I could hand over to Brad if there's anything that I've maybe missed out or that maybe is a good compliment. You know, I think for TCFD and let's call it disruption. I think this is such a great point because if we think about risks to value chains and value and supply chains, let's put them together. From climate, you can see how things like flooding is a physical risk that is already causing disruption to supply chains, right? It's causing intermittent supply problems. It's causing complete business disruption in a very real and concrete way. Using some modeling through TCFD and scenarios that Brad mentioned, you are able to put forward, they're not forecasts, they're scenarios for thinking, well, okay, if we are going to experience flooding in this region, for example, as a very basic example, then we can probably estimate that we're going to have some problems with value and supply chains, for example. But it's not just about the physical side, the impact of climate risks today, the flooding, the other issues that it might be. It's also about customer preferences. So, let's say I have a fleet of vehicles, and they are petrol vehicles, they're fuel-based vehicles from whatever it might be. And they are delivering supplies, logistics to shops or whatever to different places. Well, a large retailer who has a lot of power in the marketplace might say, do you know what? I want all of my vehicle deliveries from now on. I'm making a commitment. They're going to all be electric because that's what my customer wants. They want zero emissions. If you are part of that value chain within that organization, if you're not anticipating that shift, well, suddenly you're not going to be the supplier of choice for that organization. And so, therein, that inability to not be able to anticipate that risk will put you at a massive financial loss. So it's able to think, well, actually, maybe our large customers are going to say, do you know what, as they don't want to work with any delivery businesses that are using fuel. They only want electric, and maybe that's in 2 years, maybe that's in 4 years. And so that's another area of thinking about market preferences. But I think there's another one which is even stronger, which is, well, let's say it's interconnected, which is around regulatory change. We are seeing regulators moving faster and faster around the world. And so I think that regulatory change is going to be something that's going to move industries very, very fast. And so it's really important to understand those shifts as well. I'm going to pass over now to Brad, because I think this is a question that he'll be able to answer more fully as well.
Thank you for that. And great examples, and actually example I was just writing down as you're starting around EV value chains. That's a great example, because if you look at an EV in general, right, the parts that are required for those type of vehicles are very different than an internal combustion engine. And even beyond that, servicing an electric vehicle is very different than the requirements for an internal combustion engine vehicle. So yes, the entire transition, a market-oriented transition for automobiles, matters a lot for suppliers. It also matters a lot for countries. Thailand, where I reside, has a significant automobile industry, right, for manufacturing. A number of countries do, right? That they have focused on that. So it's also part of a country's export-oriented strategy as well, an industrial strategy that they need to be paying attention to these things. We can take that same example of EVs and go even further. What if you're a mining company and you're looking at, it could be coal mining, it could be, other types of mining. And now you're looking at, well, what are the materials that are needed for electric vehicles that will be in demand because customers will want to be part of solving climate change. So EVs will increase in demand. What does that mean for nickel and nickel opportunities specifically in Indonesia? I think there was a quote just yesterday that Elon Musk is targeting Indonesia for nickel mines. All of that, to me, and now that obviously needs to be done sustainably, but all that is part of this transition, this market-oriented transition. That's all just using one example of EVs. What if we did the same thing for agriculture in F&B? The move away from non-certified different products, agriculture products, or new plant proteins. That's one thing that gets overlooked is land use change contributing to greenhouse gas emissions. Well, if you're an agribusiness company, physical risk will definitely impact you in terms of potential drought, et cetera. But there's also a market shift for you as well, that people are demanding. Certainly in some developed markets, it's growing quite rapidly, the move to alternative plant proteins. That actually will change the value chain considerably. Maybe not right away, but over time, that trend will grow as the quality of those products accelerate. Those are just a few ideas that come to mind, but yeah, I think that TCFD, and again, maybe one last point to piggyback on what Jimmy had said earlier, is TCFD really emphasizes scenario analysis. So if you are a company and you're looking at climate change, you can have a default scenario and then an aggressive scenario, and then maybe a not so aggressive scenario. And you could tailor that for your country or your region and start to kind of say, okay, over the next 10, 20 years, how at risk are our assets from physical climate change, from regulatory risk, from reputational risk, and the market changing?
Thank you very much for answering me.
Okay, thank you very much for Mr. Jimmy and Mr. Brad, and for Elaine. Does that answer your questions? I will. Okay, she said thank you very much. Okay, and then okay. Next questions for participants who have a next questions. You can also write your questions in the chat box.
Now, I think while waiting for the next question, then maybe we can talk a bit, Jimmy and Brad, about how do you think this COVID-19 will affect globalization? Will that stop globalization in terms of the supply chain? What do you think? Just fill in the gap here. I'm not giving you more tasks to do, rather than being a complete silent here. What do you think?
I can defer if Jimmy, you'd like to go first. Sure.
Please go for it. Yeah.
I mean, I don't know that I'm that well equipped to give a great answer, frankly. I think COVID-19, but also some geopolitical risk. I mean, there's a number of different factors that are changing the color or the context of globalization, right? They're kind of adding a twist to what we've seen previously. So I think those things are perhaps more consequential long-term. Whereas I think COVID-19 obviously is disrupting things today. But in 2 years from now, will travel industry kind of go back to what it was like a year or so ago? It's very likely, just given human nature. And would the globalization of the economy go back to normal? Probably in a somewhat similar fashion, but just changing a bit, much like our habits will change a bit from COVID-19. Whereas I think maybe it's the geopolitical issues are ones that may have those are ones that could have a more lasting impact because of how entrenched some global viewpoints are of different countries. So I think that honestly to me is going to be just as impactful long term. That's my best take.
It's very good.
I think that's a good take. I mean, Dewi, I wonder from your side. I mean, for me, when I think, where were we before COVID? Actually, there was trade was kind of going down a bit. There was, I wouldn't say there was a kind of, well, it was a slowing down in a sense. And our global value chain is going to reconfigure to the extent that we thought that might happen. Globalization will change that much. Well, the evidence is sort of that it's not going to be as impacted. That things like reshoring isn't happening as much as we thought it might happen. And I think that it's always difficult to say. From London, I hear a lot of people talking far too much about South-South trade links, as if there's something new, as if there's something that is growing and is something we should keep an eye on. When in actual fact, I know from working at ACCA that we see a lot of not just trade in stuff, but actually in services and people in a kind of South way that is totally multipolar. It's happening in so many different ways, and I think is really interesting. So I think we should always bear in mind that these everything is kind of can become, because of digital, more interconnected, more complex. And I think that is our challenge, is to think the interdependencies aren't going away, and there are lots more opportunities, and there are always new ones growing and new sectors and new industries, and it's becoming much more digital anyway, which facilitates flows. So I think we should be kind of encouraged in that sense.
Those are very great opinions and insights. And yeah, I agree with you too, in a way that if we are looking from the perspective of Indonesia as an export countries, then I think Indonesia will just keep going on the export sides. Of course, it all depends also on the trade war between the US and China and everything, as just like any other country. But I think what will be challenging will be the industry of services. Probably there will be changes there, because people are not, I don't think there will be like, will be like freely fly here and there anymore. There will be some limit of that recovery years, just like Brad also mentioned, in maybe in 3 years, maybe, because to be honest, COVID is not the only disaster that we have globally. It is not the first. Yes, it is very impactful now, because it impacts more countries than SARS, for example. So yeah,
it's very global. And Dewi, maybe I could ask you as well. I mean, we traditionally, Indonesia is known for its larger industries, primary goods, and the history of that. And I wonder how you're seeing those organizations changing, how they're doing. Maybe are these the plans in there? If you look at their corporate plans, are there the investment plans in place to sort of transform a bit, or those kind of things? I'd be really interested in that.
Yeah. So how is it? Do we have a question here? Giselle?
Still not yet, Miss.
Okay, not yet. So maybe you would like to decide whether we need to conclude the seminar and continue with the next agenda then? What do you think? Is there anyone? Is there anyone would like to ask a question, even though you want to ask it in Bahasa? Okay.
Bu Dewi, if I may ask, just kind of for the sake of my knowledge as well, sustainability become one important issue, yeah, for corporate to consider, but also the sustainability disclosure can become tricky as there is no universal agreement on how sustainability should be disclosed. Now, in your experience in Indonesia itself, the companies mostly that are reported on their sustainability index, what kind of parameters or index that usually are being used to kind of measure their this type of disclosure? If you can share with us, yeah. Thank you, Ibu Dewi.
Okay, thank you, Bohani. That's a good question in a way that no single sustainability framework yet to be approved even in Indonesia. But if you're asking about the commonest framework of sustainability reporting in Indonesia, that will be the one under the Global Reporting Initiative, GRI. And of course, we also have some companies, big companies, that prefer the integrated reporting, and they are still learning the integrated reporting. For now, what you see and what all of you and even I can say will be just attachment of a sustainability report summary to the annual report and being called as integrated reporting. So of course, if that is not integrated reporting about, I can say that they are still learning. And so the indexes that you see in sustainability reports will be based on the GRI most of the time, Buhani.
Yeah. Okay. Okay, Ibu Dewi, thank you so much for. Oh, I was just curious. I know that we have the proper. Is that from the MOE? Does companies already apply that? The ones that state that they are kind of a concern on the SDG in their disclosures.
Oh, go ahead. Is the question finished?
Yeah. So does that also widely used now by Indonesian companies in their disclosure for the program for pollution control, evaluation, and rating? Just curious on that, because I think that's a good initiative. Yeah, the government have. Yeah.
Yes, it's a good question also. I can say that the companies in Indonesia that applied for proper to be assessed under proper, they will be usually include these proper performances into their sustainability report, but the report itself will be presented using either unquote integrated reporting or the GRI framework, the GRI standard. Now we are moving to the GRI standard, so it's no longer GRI 4 or 3.1, no. So that will be the condition now in Indonesia. And the good thing about proper, I think, is that they push companies to do more beyond regulation and beyond the main operation. So you notice that in the GRI standards, and actually it's the same thing in the integrated reporting framework, that companies are suggested to define first the materiality of issues as related to the stakeholder needs, the resources to be allocated, and the business risk of the company itself. In general, it will be like that. This program, they simply ask about one more item, which is what will you do beyond your own businesses? So beyond whatever issues seen as material by the company. So I think that's a good part about proper.
Yeah. Thank you, Ibu Dewi. That's really insightful, and hopefully the students or the audience also learn something from you, and also everyone, Jimmy and Brett. Thank you all. Thanks. I think, Gisela, we can wrap it up if there is no other questions.
Yes, okay, because there is, sorry, okay. Okay, because there is no other questions, I think, let me lastly check it. Okay, so there's no questions other than that. Okay, so we'll end the Q&A sessions now, and I will hand it back to Jonathan.
Okay, so thank you so much, Miss Dewi, Mr. Jimmy, Mr. Brad, and also Gisela. I believe all the information are essentials and give us a new insight, which can be important for us in the future. But before ending the session, I want to inform that all participants are required to fill the re-registration form that you have done before and the feedback form that available in the chat box, or you can scan the code that available on the screen. After that, please don't leave the meeting first because we will take some photos at 4:10 p.m. So, Gisela, can you share the QR code first, please?
Okay, wait. Okay, so here the QR, yeah.
Hi, sorry, since, we have actually one question. Would that be okay? From Henny, one of the audience. if
I'm fine.
Yeah, since we're, starting at 3:45, right? Yeah, so on the Q&A, yeah. Yeah, I think she says, perhaps to all speakers, how to encourage companies to have a concern about environmental, not only greenwashing. Thank you.
I think this one is Jimmy's favorite.
Well, it's a very good
Because
question, and
reporting across
well,
nations.
it's a question that we get asked. Well, look, I'm learning finance and accounting. How can I want to be doing something that's really real and systemic and part of the organization, and that's what I want to be doing. I don't want to be supporting, we want to have a strong footing to then do our marketing that is authentic, that it has a grounding in evidence. That's what the service they want to provide to their organizations, so that you can avoid greenwashing, which is, when you say, oh, I've got a wonderful product, it's made of this, but actually it's not recycled plastic, it's not repairable, all of those things. And I think this is a really, really good point. And I think the most important thing that we see is that you need a strategy that is signed off by the board, and it has resource allocated towards it, towards improving, towards effectively managing that environmental risk in a way that is done in a meaningful way, and that hopefully is going to be assured at the back end that there is let's say, an internal audit trail, there is an external assurance trail around it as well, so that the environmental issue is absolutely managed effectively. And fine, at some point this is reported on, and so everyone can see that information. But actually what we should really care about is how can an organization make it part of what they do every day. So it's not just thinking about that final piece of disclosure, it's thinking about, okay, how are we making something that really is truly environmentally sustainable, and that's how you avoid greenwashing. And I think one thing that we've been asked a lot recently is, as, let's say, green issues become more popular, many more companies are involved in thinking about, well, maybe there's some opportunity for me in thinking about it from a marketing point of view, or how can someone check? But actually, I'd suggest that in this age of much greater transparency, smaller businesses' risks around unsubstantiated claims have a much bigger reputational and ultimately financial risk attached to them than a larger organization that can't sort of manage this effectively. So I think it's it's really important to for finance teams to be able to say that they can help their organizations make sure that everything they say is being managed effectively. And that is clearly a path to greater performance as well as being good for the planet. So yeah, that would be my answer. Thank you for the question.
Okay, so Miss Hani, is that answer your question? Sorry, yeah, sorry in advance. I think I mistake that one.
No problem, Gisela. Thank you.
Yeah, no problem, Michelle.
Okay, so now I think all participants can fill the feedback form. I will give two additional minutes, and we will have a photo session after that. Thank you.
Thank you, Miss Hani, Mr. Jimmy, and Mr. Brad, also Jonathan. I will share the link now.
Ya.
Okay, so we will enter the photo session. Please, to everyone, can you turn on your camera? And Koino, can you please take the picture?
Okay, I will start to take pictures. Okay, now for the first page, please smile 1, 2, and 3. Okay, now for the second page. Okay, wait, there are about 15 pages. Okay, wait. Now for the third page, 1, 2, and 3. For the fourth page, 1, 2, and 3. For the fifth page, okay. Sixth page, okay, thank you. Back to you, Jonathan.
Okay, thank you, Koino. The photo session also closed our seminar today. Last, I want to thank Mr. Jimmy Greer, Mr. Brad Denig, Ms. Dewi Fitriasari as our speakers, and also everyone from ACCA and BINUS University who has supported this webinar. I also want to thank all participants for attending this seminar today. I also want to inform to everyone who want the materials can ask through email to jonathan.kesuma@binus.ac.id. Last, I also want to apologize if there's any mistake or imperfection from this webinar, and I hope we can meet on other events really soon. Thank you everyone, and we wish you have a good day.
Thank you. Bye.
Thank you all.
Thank you all.
Thank you,
Bye,
Brad.
everyone.
Thank you, everyone.
Thank you,
Sir.
Good job, Stella.
Thank you, sir.
Thank you, sir.
Bye.
Thank you, Miss.
Thank
Miss.
you.
Thank you.
Thank you, sir.
Dewi. Terima kasih Bu Dewi. Thank you Jimmy.